Boom! Welcome to this new video where I'm going to be talking about 50 mistakes that you should avoid in trading and investing so that you can make consistent profits in stock market. Let's jump in and jump into my mind map and see what are those 50 mistakes. Okay, so what's the first mistake? The first mistake is, let me jump in and go to the first one. Okay, the first one is leverage over trading. You cannot say you cannot take this much risk, but you go ahead and take more leverage and then end up in making more losses. So revenge trading, if you make a loss in particular stock or particular strategy, you will immediately jump in on the other side and you will make loss on the other side also. Has this happened to you? Under trading, okay, especially when you are just getting started, right? So you don't know what is that optimal amount, so you keep on trying and testing, and in the testing period, if you make more money, then you will make the mistake of number one, which is over trading. Okay, so I say this, which is you should invest in such a way that it should make you wake up in the morning and look at your positions, and you should invest so less that you should comfortably sleep in the night. Okay, so you should make you wake up from the sleep in the morning so that you look at your positions, and it should also give you comfortable sleep. Fourth, not having an exit plan. I call this as exit first mentality, not having the not knowing where to exit in case of a stop loss or in case of a target. No money management. Again, with respect to this itself, there are many rules. One of the rule is called a 2% rule or a 1% rule, which is don't risk more than 1% of your entire capital. So that's the money management that you should follow. Trading on tips and some advisory, somebody give you a call and you like go ahead and buy all your shares, and that trade results into a loss. You lose everything. Not respecting the stop loss, which means what you will do is, you system has told you that you need to place a stop loss at 90. You bought at 100, you place it at 90, but you will start doing the analysis, fresh analysis, when it starts going down. You'll start telling yourself, okay, now market will go up to 80 and then it will come back. There is a support, that guy told this, that guy said this. So you don't respect your initial stop loss that you kept for yourself, so that the money management would have been in check. Shifting between time frames, you move from long term to short term, you move from intraday to positional, overnight to 3 minutes, 3 minutes to 5 minutes. Keep on shifting between instruments. You start with, say, equities, you immediately jump to futures, and then you go to options because options suddenly looks lucrative. Then within options buying, then you go to option selling because you have a theta decay into your advantage. So all of that stuff keeps happening. Has this happened to you? Which one do you resonate out of this 9? Okay, let me know in the comment box, and I want to check which is your number one mistake that you are making. Number 10 is trading with the money that you cannot afford to lose. One of the primary rule is you should be trading that you are comfortable to lose in the stock market. Many people are afraid of talking about losses in stock market, but my dear friends, loss and profits are like your inhalation and exhalation, so they are very much part of the game. The more you are getting comfortable with talking about stop losses, the more you are eligible to make more and more profits. Trading on borrowed money, okay, one is not trading on the money that you cannot afford to lose. The second one is trading, you go borrow money and then try and make some big money here. Unless until you are not profitable, so you cannot be doing this. Okay, trading without a plan, and that's what we've been discussing all through. Unrealistic expectations, especially if you are just getting started, right? You, especially the short term, which means we overthink what we can do in short term but underestimate what we can do in the long term. So we all want immediate, within the next 3 months, 2 months, 1 month, lot of money, but we don't want more money in, say, 5 years, 10 years from now. So that's the big mistake that we do, not managing your trades well. Okay, you buy this, you don't know what happened to that, you go to another one, you don't know which stop loss has hit, which has not hit a stop loss, which has hit a target, all of that stuff. Not cutting your losses short. Your losses should be small, your profits should be big, not the other way around. Your losses should be short, your profits should be bigger. Okay, So that's the mantra for your successful trading. Not accepting the risk fully. Okay, not accepting the risk fully. Let's do an affirmations now. Okay, I will cut my losses short and run my profits long. Take your hand on your heart. Yeah, take your hand on your heart and say this with me. I will cut my losses short and run my profits long. Okay, I accept the risk completely, or I let go of the trade. I made you do this affirmation in one of the other video, but this is super important. If you are in a bad mood, please don't go to your terminal, don't trade on that particular day, because out of your anger, frustration, your shame, guilt, you will make mistakes. Okay, so please avoid. Switching the strategies, you move from MACD to RAC to breakout to Fibonacci to reversal to all of that stuff, right? Option selling to options buying to all of that stuff. So stick to the test before you trust. Okay, do a lot of testing before you trust, but after you trust, just continue with your plan for as long as possible. And lot of people that I come across, they are not ready. Okay, their mindset is not tuned to learn and then earn. They directly want to earn. Okay, they look for shortcuts, they look for, not ready to learn. So if you are ready to learn, type RTL in the comment box so that I know that you are ready to learn. Not having the right environment and the support system for you to trade and blossom. Okay, so the seed, if it has to become tree, it needs certain right conditions, right environment. Okay, the soil has to be fertile, the water has to be there. Likewise, your trading seed, which is your goal of becoming a successful trader and making a lot of money, you need the right environment. Starting from, in case if your family members do not support, which is part of the game, find other right groups, right mastermind sessions, right groups where you can be part of and learn. Okay, very, very important. Many people in India are not tuned to this. While we knew the concept of satsang earlier, but now when it comes to our learning, we are not ready. Okay, I want you to do this affirmations with me. Take your hand, right hand on your heart, which is on the left side. Okay, so do this with me and say this with me. I am I am a lifelong learner, and I learn and then earn. Okay, I learn and then earn. I find right mastermind groups, and I learn from the group, and I also contribute to the group. Okay, do this so that you kind of get into the right frame. Okay, super. So that's the number 22. Now that next, that's number 21. Next, we're going into 22. Not maintaining your journal. Okay, so again, hand on your heart. I maintain my trading journal properly every single day. Okay, I keep a track of all my trades. I keep a proper track of all my trades. So very, very important, so that you understand where you have gone wrong and where you can correct those mistakes. Number 23, any guesses? Okay, repeating the same mistakes. Okay, if you made one mistake, do another mistake today. Don't make the same mistake. Okay, commit to making new mistakes every day, which is absolutely fine. All right, number 24, falling prey to trading biases. There are so many trading biases. In one another video that I'll talk about the different investing and trading biases that we fall prey to. So I'll talk about that in separately, but as a mistake that you should avoid is, don't fall prey to trading biases. Okay, then trading for excitement and not for making money. Lot of people that I know want excitement, and you have definitely heard about this from so many other people, which is, if you want excitement, then don't do trading and investing with your hard-earned money. Go for scuba diving, go for some other jolly ride. Okay, don't put your hard-earned, don't play with your hard-earned money. Don't do this for excitement. Although this gives you a kick, this gives you excitement, but treat it like a business. If you want to treat it, if you want the trading to treat you professionally. Okay, super. Falling prey to trading basics, trading for excitement is done. Then trading without a system, so you don't know your entries, exit, the system, the stock, and all of that stuff. Not ready to invest on ourselves first before investing in the markets. The biggest multi-bagger is you, so invest on your own self. so that you become capable, you become worthy of making profits. Because make a note of this, you become a successful trader first and then make money, not the other way around. You don't make money and then become successful trader. You become, the word is being. Okay, you need to be a successful trader and then money will follow you, not the other way around. Okay, number 28, not having the right mentors, not knowing, not having the right guru, not having the right mentors will put you on the wrong path one more time. And mentors job is only to give you the right direction. Okay, they will not give you the entire stuff that you need to like put you on a pedestal, but they will be the catalyst. They will put you on pedestal for sure, and they will also show you that direction, and you need to walk the path that your mentor is showing you. Not thinking from the probability mindset. You don't think from the probabilities, you think from conformity bias. But if you start thinking from the probability mindset, yes, you have a good chance. Trading without backtesting or any other proper research will lead you to a lot of losses. Trading even when there is no signal, because you want to trade even if there is no signal, you cannot keep quiet. So what will you do? You will start trading again. Okay, so trading in order to show off. So a lot of us want to show our results to our family members, to our friends. I want to say, oh, I picked that stock and it is now this thing. See, I made some profits today. Yeah, so that's not a good trait of a successful trader. Number 33 is taking higher losses but very small profits. We discussed this already. Trading without a strong why. You don't even know why you are trading. Okay, you don't know your reasons for becoming successful in trading and investing. Not giving enough time to learn and master the game of trading. Okay, you want this to happen in quick 1 second, 1 minute, 5 minutes and 15 minutes. So you need to give yourself a lot of time so that you can master it. Not ready to take the responsibility on your own shoulders. You would rather want to shoot from somebody else's shoulders. It's not going to happen. So you need to take the responsibility of both success as well as failures on your own shoulders. Okay, 37 is trading with less capital and ending up paying everything to brokerage and cost. Okay, so the trading is not just about the entries and exits. Trading is not just about just placing the trade and not knowing what happens. It's about some more combinations. So if you are trading with lesser capital, say 5,000 rupees, 10,000 rupees, you are doing 2-3 trades every day, you are working, you are an employee of your broker. You are not working for yourself. So have decent capital. If you don't have decent capital, build that corpus and then come back and start trading. Okay, wrong money blueprint. Having a wrong money blueprint which is ingrained from our childhood, like having a lot of money is bad, having being rich people are bad. Okay, so all of those stuff is ingrained into our entire system, and that is acting as a limiting factor when we are trading and investing and wanting to make money in the stock market. Consistency and discipline itself is a strategy, my dear friends. Okay, not just the MACD or the RSI or the moving average, but the consistency and discipline itself is the strategy. So if you lack consistency, if you lack discipline, I have many case studies where people have told me that, Shankar, I see one signal I missed and that trade itself became a big profit, but whenever I trade I end up in loss, but then the missed trades are making a lot of profits. Has that happened to you? Okay, share me that incident if that has happened to you. I would love to see read your comment. Using more indicators and thinking that more indicators, more analysis will lead to right analysis, but in fact what will that happen? That will lead to analysis fill in the blank, and I want to know what will that happen, what will that lead to. So 41, trying to predict but not wanting to follow the market. Okay, so we want to know where the market is going to go tomorrow, but is there a possibility of predicting the market 100%? No. Okay, so what you should rather do, you should follow the market. Wherever the market is going, you should have a plan. If the market goes upside tomorrow, you should know what to do. If the market goes down tomorrow, what you should know what to do. Okay, that's what is called following the market, not predicting the market. Not trading according to the risk profile. Everybody's risk profile is different. Jyoti's risk profile is different from Kavita's risk profile, depending upon how much capital they have, what is their age. So trading according to your risk profile is an ingredient of successful trading. Okay, so not having the combination of non-correlated strategies. If you have, say, like 2 3 lakhs, you need to have at least 2 3 strategies, and they should not be related to each other. Okay, within the strategy you can have multiple stocks. Again, that's like diversification within the diversification. Okay, so but not having multiple strategies which are not related will not help you in your growth in the stock market. 44, not investing with a portfolio mindset. You only invest in one stock and you want that stock to be becoming a multi-bagger, but not investing in a set of stocks. Okay, set of stocks. Then 45 is making basic trading punching errors, like, right, instead of punching 100 stocks, you end up punching 1000 stocks. This is a real case study where instead of losing 1000 rupees, one of my friend lost 10,000 rupees, right? So please take care of this particular mistake. Not canceling the SL if the target hit and vice versa, right? So has this happened to you? This is one of the common error that I keep seeing from the people. Okay, so you need to, this is again part of the trade management, need to be really very take care of. You need to be taking care of this, not treating your business trading like a business, but you want to treat it like a monthly or your employment, right? Every, whether you work or not, your employer will give you money. Here you need to treat it like risk and reward. You need to treat it like a business. You need to invest in the business. You need to invest your hard earned money. You need to invest your most precious time to learn and then master the game, and then eventually you will be on a profitable journey. Number 48, not thinking from the long term. As I told you, you want the profits within 1 day 2 days, but not ready to give yourself and the market a lot of time. Okay, I say this, which is, you need to give time, some time, to give you some success. But what do? We want to like compress and immediately tomorrow itself I want to become a crorepati, but with lesser chance. But then if you had given 5 years, 10 years, look at this, right? I mean, everybody, we do not have a long term plan at all. 5 years, 10 years, 15 years, 20 years, we don't know how we want to do this trading or investing. We all are only worried about tomorrow. Number 49 is not reviewing your trading plan periodically and making the changes accordingly. And last but not the least is not trading on the strategies or the system that are compatible with you. Each of us have our own, we have our own personality. Some of our personality is suited for trend following, some of us are suited for scalping, some of us are suited for long term. Okay, your personality should define what strategy, what system should you be trading. So what does that mean? You need to learn, I call this as a T-shaped trader. You need to learn different strategies and go deep into one or two or multiple strategies. You need to learn different strategies, but go deep into one or two trading systems, and you master that, you make it your own. Okay, so that's the secret to trading success. Hope you loved this 50 mistakes that I just covered in this wonderful video. What are the mistakes that you are making out of this 50? Let me know in the comment box. And what are the steps that you are taking to correct your mistakes? That's important. Awareness and correction. Be aware of what your mistakes and correct them. Do the take the course correction, and you will be super duper profitable. Till my next video, take care of yourself and make hell lot of profits in your trading journey. See ya. Bye bye.